Good morning.
Hey, JVC's here. Why aren't you a
I am.
co-host? That's weird.
Because this time around, I had to just sign up like a regular person.
Ah, okay. I did make you a co-host when
I am now.
yeah,
Yes.
well, yeah. All right. Well, last night was great. Great, great setup. Um, I literally just hung a bunch of sell orders between the VWAP um, and 4,000, and they got hit all night and filled the other way. It was a really beautiful little range. Here's the ES and NQ and overnight SD4, SD3, SD2, SD1. And, again, this is just such a good technique for how far away are we, particularly when we're range bound. It works so well. I mean, this was actually an exit of a short here, and then that was another one. And I was in bed asleep. These trades just ran themselves. It was pretty fun. Anywho, but going into NFP, which comes up in about a half an hour, you could argue a lot of things right now. There could be some short covering going into it. We could see people getting short. The number is going to be controversial no matter what it is. If it's too hot, everyone's going to say, "Oh crap!" The Fed needs to stomp on the market some more. And if it's too cold, everyone's going to say, that the market is not pricing it in yet. And it's just a lot of craziness around this number. So once again, when we have this good of a range defined, like I was just showing you guys on this, the extremes are really clear. So that's what the game's going to be about. When we get the number, if we can push to an extreme, it might be fadeable. I wouldn't just jump in and fade them because we're kind of in a precarious spot overall, but I think there's a good argument for looking for fades in that environment. What the heck is going on there we go. Okay. Sorry, I'm looking at one of my other views on my other screen. And now it's working. Okay, so let's see. The TPO view kind of just illustrates exactly what I was just talking about. Look at this overnight. It doesn't get more symmetrical than that. And if you're working statistics, a bell-shaped curve that's that symmetrical is literally the perfect way to play a range. Fade one end, fade the other, as long as they don't totally go running either way. And the odds that we're going to go running up overnight going into this were really low, particularly with all this volume right above us. And same story below. So it's really clear here what happened overnight. And we've got some really clear boundaries nearby, big air pocket if we go below 3910, 3900, big fat whole number. We've got an old poor week high above us at 4070. So we could get up there. That's 100 points away, but that's not out of the question. I think before that, I'm watching so this is the overnight. This is yesterday. This is the overnight before that. These three are what's interesting to me. Earlier in the week, the overnights and the regular session boundaries were just below that. So I think that's probably the area that I'm going to keep an eye on the most as this NFP plays out. So that's the scoop there. Otherwise, we have a full half an hour here. I start a little earlier than I usually do. I usually start this at 5:15. Again, I'm talking Pacific daylight time. My time here on the Central Coast where it's nice and cool. The rest of California is burning up. So anyway, so open Q&A, open office hours until we get the number. That's why I opened early. Figured we could just talk about whatever anybody wants to talk about. I have one topic I want to throw out. I remember when stuff like this I used to think this was important. So, and what am I referring to? Well, this is my Twitter, Surfing the Markets. If you're interested, follow me. I tweet occasional wisdom. Anyway, this really caught my eye. So this traders community, whatever that is, heading into the New York Open, S&P futures are up for it, trading 0.3 above fair value. Fair value is complete and total CNBC nonsense. This is a calculation involving futures prices, interest rates, and the discount to the cash, and it is meaningless. It has nothing to do with the auction of trading. And I see this crap all the time. Fair value, I'm going to short fair value. It's meaningless, people. I've been watching them talk about this on CNBC and before that on the Financial News Network, literally for almost 40 years. And it has never meant anything. So, the moral of the story, which is why I brought this up, it just drives me nuts when I see this kind of garbage. The moral of the story is that the market is 99% nonsense, or the market media. And you got to really narrow down what matters. Fair value doesn't matter. So posting it and talking about it is nonsense. Get the nonsense out of your brain and focus on what matters, which is the price. The price doesn't lie. And the volume around the price tells you aggression. So if the price is aggressively moving in one way or another, that's all you need to know. And then you rank that movement based on the volume. That's all there is to this. So, looking at crap like fair value is just a distraction. It will never make you money. So again, just a baby rant this morning on that. I see that stuff and I just have to respond. It's like, show me a trade setup you've used, Mr. Fair Value Poster, that makes that relevant. I've asked that question of people on Twitter and on financial news and everywhere else. I've asked that question now for, like I said, almost 40 years. I have never in that time had somebody respond with an edge in that. So there isn't one. It's that simple. If you can prove me wrong, show me an edge in that, I will eat my words. I've been saying this, again, 40 years. No one has ever challenged that. So I just wanted to start with that because you have to have a really, really good nonsense filter if you're going to play this game. Because trading is incredibly simple. It's not easy to do well, but it is incredibly simple. The parameters of how you make decisions could not be easier. But executing them is what's tricky, and that's all there is to it. So if you stay focused on, okay, I have to execute against my edge, then that's all that matters. And if you don't have an edge, you need to find one. I did post in the pit yesterday a really good example of an edge. If you're, I know we have some public guests that aren't full TRG members, but welcome, by the way, guests. But if you are a TRG member, check out this thread that I posted. And let's see, I'm looking down to see where the heck it went. Okay, there it is. No, wait a minute, sorry. Everything just got moved around, so I'm a little lost. Setups, that's where you will find it, I think. Yes, this setup has 100% edge. Read this thread. Literally, I have not found an example of this, and I've been searching. I've got my software real-time searching for this and have not found any example where this condition happens and we don't get a trade. That's an edge. That's a perfect edge. Now, executing it's a little trickier, but it's actually a pretty straightforward one. So anyway, check that out if you're TRG and if you're still edge hunting. I know there are some people that many of our members have good edges and just need practice. Many of them don't understand what the word edge means. And this is a good example of it. A specific, and I'm not talking about an indicator doing something. We're not talking about, this crosses that. No, that's not this. This is when we get to a certain extreme, if a condition occurs where price reverses hard on volume, that's what wicks are on this type of view, and that's what price rejectors are on footprint views. You will make money there. It's simply that. It's that simple. There are no exceptions to this that I found. And again, whenever I say something like that, I'm asking to be challenged. Find me an exception to this, and I will eat my words. Again, I haven't found one, and this is what I do. I look for exceptions to stuff like this. Nothing. Have not found one. So, sermon over. Ignore the nonsense. Focus on something that's a legitimate edge and nothing else. Turn off CNBC, turn off the news, turn off your FX news feed on your platform. You don't need to see that stuff. The price will tell you everything you need to know. And that's it. Okay, anyway. Probably the vast majority of people that needed to hear that aren't here yet, so oh well. You snooze, you lose. Meanwhile, I will repeat some of this maybe right before we get the number again. If we get more of a crowd, there are quite a few people registered for this, but for some reason, people register and then don't show up. Sometimes. Anyway, we're just kind of sitting right here at the top of this big high volume node that we've been sitting on. And as I said at the very beginning, the extensions of this have been eminently scalpable. There was literally no exception to that last night. Again, every time we got to extremes, either direction, it was a really good trade. I was playing short off of this end and just covering on the other end. And I slept through that. I had trades, I put up limit orders and I just said, you know what the heck? I rarely do that. And last night it worked really well. It was a good set of conditions to do that simply because, what are the odds we're going to get a really dramatic overnight move right before NFP? It would take something pushing the equilibrium, some bit of news or some massive short cover from somebody with a big position or something. But obviously that didn't happen. So, and again, that's really rare that happens on that pre-NFP. Yes, Fooled by Randomness is a great book to understand the significance and non-significance of things. The thing that hit me about that book the first time I read it, which was in the 2000s when it first came out, I think around 2008, and I'm reading it again now. But when I first read it, the thing that hit me was I had attributed edge and skill to a lot of my wins. And, that's resulting, right, in Annie Duke's language. And absolutely, that was, the minute I stopped doing that and just started looking at, okay, where is the result of good process and a good edge? The minute I started doing it that way, it was just a total game changer. My trading went from about 60% profitability with, bigger winners and bigger losers, both ways. I was equity positive, but, like most traders, and I wasn't that new then, I'd been trading for 30 years at that point or 20 years. And that made such a big difference to me when I started thinking that way. Instead of thinking in terms of, looking at my results. Screw the results. The results take care of themselves. Look at the process that's creating the results. And when I started doing that and questioning whether my wins were luck, randomness, or result of my edge, and I'd never questioned that before until I read that book. The minute I started questioning that, I was like, whoa, game changer, total game changer. Understanding why something works is critical. And often it's just luck. And, perfect example, like that Apex post from Daryl, $100,000 NQ trade. That was luck. You were in the right place at the right time with the right trade. But, unless you're doing that every day, don't oversell that to yourself, because that's how traders lose an enormous amount of money by making calls based on flawed logic. So. Absolutely correct, Amy. I totally agree with that. The trick is to be in the right place and the right time. And then if you get lucky, you get lucky. And, last night is a perfect example. That could have easily worked out the other way around for me. I was trading just using limits and I was asleep. So, normally when I'm in futures trade, I watch every tick because there's just too much that can happen. I rarely will just leave a trade on with exits and entries up as limit orders. Rarely do that because I've had things happen like where it'll go right to my take profit and it won't fill, and then it'll go all the way back to the other end of the range. And because I was asleep, I missed, $50,000 profit or whatever it was. And so I generally don't do it. But last night was just a perfect setup for that. I slept comfortably and didn't even watch it. I had alerts set in case it went totally nuts. But only one of them ever went off, which was the extreme when we hit up into the 74 area, and I had a fill up there, and again, I had placed limit orders there in advance. Started doing this last night when I put that post up about the NFP setup, which I'll bring back. It wasn't the alert ones. Yeah, this one right here. That I posted this again right after the close. We just, this was the initial reopen here. Hang on, that's the wrong view. I think this was it. Nope. Hang on. Where are you? Yeah, there it is. Okay, so this is where we reopened right here. This is just the quick session again on TOS because I use it for alerts, and it was just really clear. I don't know what else to say about that. Unusual situation. Anyway, and like I said, it resulted in some, you can look at the P&L. It resulted in some really nice profit. And by the way, that was as of last night. It's actually improved a lot since then. So the P&L, so anyway, that's kind of the landscape right now. I didn't even look if there was any earnings this morning. Let's have a look. See, I don't think there are anything substantial coming up. No. So that's typical for today. So anyway, let's close that. Let's see. Yeah, I think that's correct. We do cross paths with people. And I think a lot of times it's so contextual. I've had conversations with people years ago and recently that at the time, I didn't really put that much weight in any of the things that were said. And then, a little bit later, I reflect back on it. That's totally true. And this is such a simple game if you don't overcomplicate it. Two things matter: price and volume. Levels don't matter. What happens is price and volume. Which way is the price going? How much volume is pushing it? Is it getting absorbed? Is it getting not absorbed, et cetera? So anyway, yeah, the other comment about what you said, Jeff, is working hard in trading is very different than working hard anywhere else. This is the one discipline I know of where you can put in countless hours and not make any money. You can put in countless hours on a trading day and lose money. And so the work hard profit loss equation isn't clean like it is in many other fields. And if you're a lawyer and you make $1,000 an hour, you work 1,000 hours, you make more money. You work 1 hour, you make less money. It's real simple. Trading doesn't work like that. And in my experience, what happens is the more time you spend on things that are a waste of time, the more screwed up you get. Like the people that spend hours analyzing charts. I used to do that 30 years ago when technical analysis was all we had. But now it's a totally different game. Here's a really good example. Here's the structure from last night. 30-minute footprint. This spot right up here was UB from earlier. We came up there, we cleaned it up, and then immediately traded away from it with clear absorption right there. And that just doesn't get any more straightforward. You short that spot, and if you're wrong, it's going to be pretty obvious. It's going to get up here really aggressively and puke those people out. But it never even tried to do that. It just immediately traded right back down into the range. And again, we have just such beautiful volume profiles here. It's just so symmetrical. And right now mine are the same. This is Globex and this is regular trading, and they're the same at the moment. That'll clean up once we open up, and then we'll be able to see the difference. Anyway, so that was of interest. What else is there to talk about? Yeah, those ignites are interesting, Amy. I've done them in the past. Right now, I'm focusing on blocks of 25K accounts because they suit my micro approach, and I don't need more drawdown. But I hear you. Those are fun, and having one bigger account that you can really get aggressive in, one bigger funded account. There's definitely something to that. That's the strategy I'm taking with the elites because they don't have the accelerator like Lilu does. I've got a 50 and two 25s there right now. And I've also learned that depending on what your budget is, 3 is a really nice number for funded accounts copying, particularly if you have one that you can use with risk management that's more aggressive, like I just said, like a 50K versus a 25K kind of thing. I think that's a good system. If you're really consistent and you're really profitable and you get a really good edge, my approach is take each funded account, and when it's funded and I'm withdrawing from it, use that money to create more accounts with that provider to copy to. But there's a 3 account limit on the accelerators at Lilu, so any more of those have to be investors. And so rather than doing that, I'm doing those over at Elite, which has the standard kind of 4-month payout thing. But I've never had active copying for more than 5, and I found when I had 5, the monthly expense wasn't justified. You're paying $100 for each one. And 3 of them, $300 a month, that's a really easy number to hit every day. But when you get much bigger than that, if you have a couple of bad days, all of a sudden the expense to profit ratio gets less favorable. So that's kind of something I've been playing around with. What's a sweet spot number of those? And my conclusion is 3 so far. Yeah, I hear you. I like that idea too, Amy. Yeah, one thing also I've learned in this copying, this escapade through copying, is having your copier turned on all the time is a mistake. I mentioned this in a couple of other sessions I've done. What I've been doing is I start trading without the copier. And then if everything is going well, if I'm trading well and everything is working the way I want it to, then I turn the copier on. And the reason I do that is there's been some times where right out of the gate, something went wrong, platform problem or whatever. And having everything copying, it does a lot of damage. You can control it, but it damages all of your accounts. And it's more conservative the way I'm doing it, starting with 1 and then moving to copying once things are working well. But it's also kept me, I've managed to keep the 625 drawdowns working in the accelerators. And that's tricky, even with a couple of micros, you don't want to get anywhere near that. So that one, again, works well, tiptoeing away from that drawdown, as I've said in the past. Anyway, that's why. BoolNX one-time fee for a master account. I haven't looked at BoolNX at all. I don't know why. It just hasn't been attractive to me. So I can't answer that, Jeff. I'm very wary about all these funding firms. They're going to start blowing up at some point. And so I'm kind of trying to stick with the ones that I think are strong and stable. And I just don't know anything about that one. I mean, I know the Elite people I've looked into. I know the Lilu people, obviously the Apex guy, those are all pretty clear. And I think, if you're making money with those guys, your odds of actually getting paid are pretty good. But any of the other ones, I'm suspect of. And again, I'm not saying anything negative about BoolNX. I just don't know anything about them. I know Lee's done a few with them. And I measure it by how they communicate with me, how fast they fix problems, the customer service. And again, Lilu, Elite, and Apex are all really good with that. And all of the others I've had troubles with on and off. I don't do any of the ones that don't allow copying anymore, so that rules out UProfit and OneUp and all those guys. So I only work with the ones that'll copy, because that's the only reason I'm doing it. I don't need their money, but their money is useful for this kind of an event. Boy, look at this. We're sitting right up at the top at YM and RTY. We pushed up into that kind of zone I was selling there overnight. Remember I said I was shorting 74. We're at 72.5, which is getting absorbed really heavily right now. But here's the problem with trying to short this. There could be some short covering going into this. The number could come out and we could shoot easily to 4,000. That's a no-brainer, just on the thin liquidity when the number comes out. So I'm just not in any hurry to play here anymore. Again, last night was really profitable. Let's keep the money and be careful here and see what we get. Again, the NFP trade is a trade of extremes. I've thrown this up here a couple times, but people keep trickling in. These are the VWAP and standard deviations of the VWAP, ES and NQ. These were really good fade trades up here. We're up here again. I am not fading this now because it's too close to the number. You could really get screwed fading this up here. You could lose 25 points in a heartbeat. So that trade was really good overnight. Now, even though look at massive absorption up here, it's still the potential for a puke up into here is huge. Do not fade this. You will potentially get really run over. And You can see that's actually happening right now a little bit. So that's why I'm not going to fade that. It's really important to understand when a setup is real and when it isn't. This last night was a perfect setup. I threw a lot of size at that, but it's not now. We're getting absorbed and we're still going up. That's really dangerous. That's what how a puke starts. So critical. If you want to understand the different components of these decisions, as I explain them, there's a document in process element of my scalping decisions. This is how I make decisions. And time of day right now is the critical one. This setup is perfect, except right before NFP is the absolute wrong time to do it. So that's a really clear example of how those criteria come into the picture. All righty, we have what? We have 5 minutes. Again, for those of you just trickling in, it's open Q&A, open office hours, and we're going to see if we can scalp some extremes here. So that's the ticket. I've tried to trade the news with evals. What you have to do, Calvin, is you have to fade the news. Don't trade it, fade it. Exactly. You trade the reaction. Never try to predict the news. That's the key. Yeah, exactly, Amy. I do that too. A lot of times I start with a cash account and then I go to copying evals later or funded accounts later. That's exactly what I do. Yeah, Calvin, you see all these idiots posting on Twitter and Facebook about well, if the number comes in high, I'm going to short here, I'm going to buy here. And again, that's just so arrogant and so ignorant. It's clearly demonstrating that they have no understanding of how the auction works around a news event. Forget what the numbers are. Look at the reaction. And there will be several reactions because whatever the numbers are, everybody's scanners are going to read them and immediately react. And that's why we could go both ways really hard. And then people are going to start baking it in like, oh, wow, that number's too hot. That's, we need to fade that. That's what I mean. So the first reaction, by the way, is always, definitely stay away from the first reaction. But if you can get a really good reaction to an extreme and it kind of pulses there for a second, that's your opportunity. And it's always a fade. You never go with those. There's nothing that could come out of NFP today that I think would create a significant trend day up, for example. So fading real extremes to the highs is low risk, because you could be wrong and it could keep going up, but at the extremes, that's the whole point. It's asymmetric. You have really good odds of pulling money out of that trade. Let's see. How many micros are you using in accelerators? Okay, that's a great question. Really quickly, I'm doing the accelerators with the 625 drawdown, and I'm trading them with 2 micros until I get over $1,000 of profit, which I'm just about at right now on the ones I started last week. So then I have $1,600 of drawdown and I start getting a little more aggressive. But I don't get really aggressive with those until they're above the $2,000 and the static has gone to the 100,000 plus 100, and then you've got a lot of room to work with. So the max drawdown per, I will never let a trade go if I'm doing the 625, I'll never let a trade go more than $100 against me. And so that leaves 500 more if I was right on the edge. And again, Maria, it goes back to the risk management that I normally use. Whatever a profitable day is, I will never let it be more than 2 of those on any given day, but I clamp it down real hard. So I'm doing the 1+1 trade in micros, and that's plenty. 2 contracts, you can easily work that 625 drawdown up to $2,000 and just keep really clamped down on the losses. You've got to just get out of the way if you're wrong and really keep it tight, but a little bit at a time, just keep stepping it up. And once you get away from that 625, it gets a lot more comfortable and you can withdraw quickly. It's a great account if you have a good edge and you're really disciplined. So just for example, I have 3 of them. The biggest drawdown that any of them have had at this point was $290. That's as far as I got. And now I'm well into the profit, so that doesn't matter anymore. But that's below the 100,000. That's where I got on a mistake, platform-related mistake. And again, don't let any single trade or any group of trades in a day blow you up. I saw a bunch of people posting on Apex and it was on Apex, that they had bought the stuff on sale a couple of days ago or whatever, the Labor Day sale, and they already blew the accounts up. And I'm like, really? I mean, unless you're just playing around, how is that even possible? But people, boy, look at how we're moving back and forth, 8 ticks at a time. So we're going into the thin liquidity. We're right before the number. Anyway, let's get the number and then we'll talk more about this stuff. What are the two sets of parallel lines? Those are linear regression channels. And if you sit tight, Stan, I will explain that after we get the number. Just remind me if I forget, or JVC remind me. I'll explain what those are. Just a way of gaming the range and the very short-term movement. Linear regression is math's way of saying what's the best fit to the data. That's what that is. Whoa, look at that. That was a nice, look at this. We're all over the place. We've been as high as 80 something, and now we're at 60. Look at this. We're jumping around by 10, 20 ticks at a time. This is not tradable. This is called price discovery. And it's because the number came out and it's being priced in. That's how auctions work. Don't try to trade this. If we get a really good extreme, it might be fadeable up here. That 94 was a good one, but it traded up there way too fast. Let's see if we can get up there again. That might be interesting. Park an order up there. And we might get a fill right now. Let's see. I'm going to go right there to 90 and go ahead and take this. So I shorted 89.75 here just for fun. And let's see. And it's just a one lot in the micros. But I think this is an interesting spot because you're seeing absorption here. It's an extreme. There's a better extreme further up, which could get interesting. Maybe above 0.02 would be interesting here if we can puke up. Again, that's right around that big fat whole number. So it's a decent spot to fade, but don't get too aggressive. Let's see if we can get one more there, and I can't. It's going back down too fast. So got an order sitting there right in this congestion. Let's see if we can get another fill there. But, and the other thing I want to do is definitely put a target down here because we could sweep down there really fast and fill that. So let's just kind of watch what happens here. You can see the traded volume. So you can see this is mostly getting absorbed up here and on the sell side, but we're not going down anymore, which is noteworthy. I've got another sell order up there. I'm short from here. I think this is going to work, but it's going to take a little time to price in. We're at significant extremes. Remember my extremes a minute ago? We obviously blew through all of those because the volume went up and the extremes are based on the volume. But now this trade's profitable. Let's see if it drops down a little more, I'll lock it in and protect it. But I don't want to do that here. It's just too volatile. So, and again, we're only just playing with a micro for fun. I'm not copying this. I'm just doing it in one of my accounts, and I'm just demonstrating technique. Again, you could do this with a lot more contracts and risk more money, but make more money potentially. I still think this is a sell up here, but I don't want to just hit the market and sell it. I want to catch another push up if I'm going to add to this. In fact, I'm going to put another one way up there. If we get a really good puke, I'll get filled. I don't think I'm going to get filled on either of these, to be honest with you. We're running out of gas on this extreme, so we should fade back into the range is what should happen. But, it doesn't happen instantly, and it doesn't always happen. So look at this bar here. This is pretty crazy. Talk about a tail. Huge volume down here. We're building a little volume up here, so it's, it's trying to establish this price. I just don't think it's going to hold. So let's see what happens. Kind of all over the place. Look at all this volume everywhere. This is clearly price discovery. So just to be clear. Okay, this spot looks real interesting for that contract. I'm going to scoot that down just a bit and see if I can get one more here. Boom. Okay, we got it. So now we've got a 2 lot. I have a target way down here where the value area is, but I'm going to put another one in, maybe right about the middle of that range, just in case we sweep down there. And again, this is a very speculative form of trading, but it's generally profitable as long as you keep your opinions from becoming concrete. This could end up being a move up here, and I could be wrong, but because I waited for it to kind of settle up here, I'm only off sides by a tiny bit. So the odds that it'll go back into that range and be profitable are really high. But again, odds are odds. even if your odds are 99%, there's still a 1% chance that it's not going to work. So you have to think that way. And again, I'm not concerned about small losses here, kind of just playing loose for some gains, understanding that even being offsides a little bit here, it's so asymmetric. It's such an extreme that, the odds are overwhelming that it'll at least come back into this range a little bit, and we'll be able to take some nice profits out of it. So, and again, if you're doing this in a mini, it would be bigger. I'm doing it in a micro, couple micros just to demonstrate the technique. You could scale it to whatever's appropriate for your account size and risk management. I always get these people coming in these free sessions and they say, "Oh, you only made $50 doing that." $50 or $5,000. It's exactly the same technique. I'm just not going to do a live session here and put a huge size on in my cash accounts, with Zoom running and all that. It's just too much platform risk. It's not worth it. We've had Zoom Bork live sessions a number of times. Boy, this is consolidating up here. This could get really interesting. It's perfect. It's exactly what you want to see. One of two things you want to see: a sharp move that immediately retraces. That's the best, because those are easier to trade. But this is perfect. We're getting a lot of volume up here. If it doesn't start selling off, then it's going to be a real interesting move back above 4,100 or 4,000. But again, this absorption here suggests to me that we're going to drift back down into the range. It's just a question of time. I will answer the question more thoroughly about these channels over here, the linear regression. Was that Stan that asked me that? Yeah, just sit tight. I want to manage this trade right now. Okay, now we're in profit on this 2 lot, short from 92.5. You can see massive absorption there. So, if we trade above this, it's going to puke really hard. We could easily get up to maybe 10. There's an order at 5. I'm going to put another order up around 10 just for fun. Beauty of micros is you can do this. I'm 2 micros. I'm not taking any substantial risk, but I can scale nicely. I think we're going to peak this up. It's definitely getting absorbed here. If they can push it above, the big fat whole number, then we'll definitely puke out all these people that sold here. I'm not going to get out of the way. I'm going to just continue fading this because I think it's going to go back into the range. That's my view. I may be wrong, but that's what I think. And again, that's the range we're talking about. There's this giant air pocket between this big chunk of volume and this one. It's a double D if you're familiar with those. And the middle is really the opportunity coming from either direction. So that's what you want to look for in these. And again, I'm slightly off sides here, but I'm actually willing to scale into this even more. It's just quietly setting up. I like the setup. Anyway, yeah, big trays and a picture of my boat. Exactly. And again, I'll come back to your question about regression. That's a good question. I just want to stay focused on this action right now. Look at, so this is YM, this RTY. Both of those are at their extremes too. There goes NQ, so it's also going up. So we should get a little more fill here, I think. But boy, another set of absorption right there. This is going to be quite a battle as we go into the open, which way this is going to play out. It really is. Should be fun. Remember, at this point, we're not even up 1%, so it's still in the rounding error category. And the volume here is decent, 200,000 contracts, but okay, what's going on there? Why is that still on? Okay, that's really weird. Sorry, I have something weird going on in my reporting here. There's not a screen you guys can see. Just give me a second. It's showing that I have 2 separate positions, which makes no sense unless I am copying and I didn't realize it. So hang on 1 second. Let's grab that and look. No, we're in one account. So what the heck is going on with something weird in my reporting over on my left screens that you guys can't see? So it's giving me some information that doesn't make sense. It says I have 2 different positions on here, not a 2 lot. I don't understand that, but I'm just going to leave it be for now. Again, micros can't do too much damage. God, I like this short, but I really want to get filled up here and not here. That's the puke up there. So anyway, so this session will go till the top of the hour, and then the regular TRG session will start. So the public session will end, and it's a different link. So you got to go to the regular 6 a.m. Session for TRG. God, I'm so tempted to fade this some more here. And I'm going to do one more right there. And I still want those. I'll take up to 10 here if we can get a little higher. 40-20 is an area I really like. Look where we are in TPO land here, guys. We've got this massive tail up. And remember, if you were here right at the beginning, I talked about this area of volume. If we get above this, I'm wrong. If we can clear this and keep going. But 40-20 is the line in the sand that I want to sell into that unless it goes badly and we go up, in which case I'll get out of the way. We do have this poor weak high up here, but that's pretty far away. It was 100 points from where we were before. So I don't know if we'll get back to that or not, but it's worth noting that it's there. Yeah, this one's really taking its time. Totally agree with that, Amy. But I think it's going to work. I think this is going to be a really profitable trade for me, but I'm going to manage it pretty tight. Let's put a take profit at $100 there on that one. So I've got 3. I've got orders to take them off. The last one's down here where all the volume is, right on the value area, and that's the VWAP right now, that blue line. That's Globex and the session, because obviously we haven't opened RTH yet. And if you want, this is the VWAP, this blue line right here. So you can see we're kind of just sitting up here on SD2. There's a lot more room to go up extreme wise, which is why, I really would like to fade further up. In fact, even up to 20, that area I really like if we can get up in there and puke some of this out. But that may or may not happen. So the beauty of this structure here is that we have this giant air pocket, and even if we end up going up today, the odds that when you get a double D like this, the odds it's going to fill some of that in are just really, really high. It just, you got to be patient, but the odds are really high. And look at that absorption up there too. That's pretty good, 156 by 0. So I think this trade's ultimately going to work really well, but I'm not going to be overly aggressive. I'm demonstrating good risk management for you guys. I want to fade a lot more farther up, but right now it's trading right on me. Now I'm profitable. Cool. All right. This first node of high volume might be a spot to take a contract off, depending on how it trades through there. So I'm going to scoot this order here up to there, right at 90-ish, 92-ish. If it doesn't trade through that, and it looks like it wants to go up a little more, so that's a good spot to take one off and continue the risk management. So maybe we'll move that guy up to there. By the way, there's a conversation going in the pit about Jigsaw versus Sierra. What I just did in Jigsaw, you can't do in Sierra. So those of you saying you can do everything in Sierra, you can do in Jigsaw, that's just not true. The order management in Jigsaw is superior. Okay, I took profits there. I'm now well into profit. I still have 2. I don't want to, I want to let this drift back down. So I'm not going to, normally I take profits really fast whenever I have them. That's one of my rules. You don't go broke taking profits. But on this kind of extreme trade, you have to give it a little time to play out. And, look, here's that giant air pocket right there, double D, big volume up here, big volume down here. The odds are overwhelming. We're going to trade in this air pocket, and here we go. So now I might protect one of these. That's a stop on one of the 2 contracts to take profit. Again, in case this area consolidates and then pukes up, I don't want to hold the bag. I want to short further up. So I'm going to protect another contract tight. Again, just good risk management. And I'm demonstrating technique once again here, how to make money, whether you do it with minis or micros, and how many you use is up to your risk management. So don't judge this by the fact that we're making, $30 or $50 or $100, add zeros commensurate with your size and risk. Okay, tightening that one up a little bit more. I'm going to scoot this guy down and just kind of try to ride this down if I can. And this would be a really good spot to start taking aggressive profits right here on the top of that. So we can get down there. That'll be perfect. And that'll be, a $250 trade on a 3-lot micro. And that's pretty good. As you can see, we're profitable about $60 here, and I'm just protecting a little of it with that take profit stop there. Scoot that down a little more. See how these are filling in with volume on the bid side, and we're moving down. I'm just kind of using that to lean on. So as long as that's below me and price is below that, then I'm in good shape here. We won't even hit that take profit. But if we start to trade back through that traded volume you're seeing there, then we'll go back up. But this trade's working really nicely. This is a really good example of this setup. And I'm going to kill that target and just kind of ride this down. We could end up with a lot more than that target. And the other thing I'm going to do is I'm going to now protect this with 2 stops. I don't want to give any of this back. So we're about to get hit on the first one. Nope, look at that. Okay, so let's keep that guy pretty tight. There we go. Okay. I don't want that one that close, so I moved it. Let's put that one there. So if it doesn't trade back above 90, I'm happy keeping that last one, and I'm not going to have a target. We could go all the way to the other end of the range with this, and it could end up being wickedly profitable. And what's the other end of the range? Well, look, we're up here. We initially hit SD4, but that was just because the volume hadn't been priced in yet. Now it is. Now we're down at SD1, and we're in normal here. But the other end of the range is all the way at 49, and so this could end up being a really, really good short with this last contract. So now we got $100 in it left over anyway, I should say. And again, look where the quarter numbers are. Look where the volume traded. As long as I'm above that heavy bid action, I should be safe, and I shouldn't get hit on this take profit stop. So now we got $100 in the bank. And let's protect that down to the next quarter number, which is 85. And I think I'm going to get hit right there. So nope. Still going down. All right. I'll take it. By the way, this is exactly what I was hoping we could demonstrate for this session. This is a trade I do every time there's a big news event, FOMC, NFP, whatever. There we go. Okay. That was nice. And it's still showing this other trade, which doesn't make sense. Okay, there we go. Now it's caught up. My platform caught up with me. All righty. So let's see. Totally, Amy. What Amy said is absolutely correct. You just have to tiptoe your way to that. These guys that have been trading for 6 months that are, trading 10 lots are just insane. It might work sometimes, but other times it's going to just totally run you over. And you don't understand risk management if you're doing that. Or if you're posting nonsense about $1,000 or $100,000 trades in NQ, like Daryl was doing. That's just so irresponsible. That doesn't help anybody. It's just the get rich quick feeding, and that's just bad news. All right, real quickly. So I canceled all my other orders, and now this is pretty much priced in. We didn't go all the way through that zone, but we're in that low volume node now. You can see here's double D top. We're right in there, and I potentially could have let that ride down farther. I might reshort it, but it's kind of consolidating again here. This actually isn't a bad spot to reshort it because of that consolidation. Let's go ahead and, I didn't quite get to the button fast enough. It traded away, which cost me a few ticks, but I like this again short down to here. Yeah, here it comes. So perfect example. Just follow the price and volume and you will never be substantially wrong. Let's protect that now. And here we go. And again, lean on the heavy volume. As long as you're above that, you shouldn't get stopped out when it's doing this, because that volume's on the bid side and price is going down. In other words, people are slamming the bid and the sellers, whoa, okay, we got filled on that. I just saw that push down and there was a sweep up, so I decided to take profits again. So now we're up $135 on that with our micros. So that's a nice little, and we're right back on value here. So this is kind of where I would be taking profits no matter how many I have. All right, real quickly, Stan, let me address your question. If you're still here, you are. Okay, so these are called regression channels, linear regression channels. And basically regression is the math of best fit. If you're a math guy, you know what regression is. If you're not, in English, it's a sum of squares. And what that does is it gives you the best fit of the data. It doesn't, you do boundaries. The data can override or overrun the edges of the channels, because again, they're what's the best fit of all the data plots in there. So what I do is I run two of them. One's on this 5-second, one's 50 periods and one's 25 periods. And it's just showing me the geometry of the short-term price action. So that's the answer to your question, Stan. It's a really powerful tool to scalp tight ranges. Or to see, turns in the market. I was speaking about this earlier. This is where the news came out, but there was some really good fades up here last night in that area, and you can see this. We ebb and flowed up there, and then we started to turn down. And if that's the condition, what will happen is you'll see that in the regression and the geometry between the two. And it's the opposite's happening here. We traded down. Now we're bouncing in the range, so that's an expected size bounce. again, best fit of the data. If we break out of that and get above this line here, which, that's 4,000, which got sold so heavily, then, it sets up another opportunity. But that's what that's about. It's just a very short-term way of gaming the price action using, and I've talked about this in a bunch of our training sessions. I tried literally everything. I've been trading a long, long time. Most of you know that. I'm 62 years old, almost 63. I've been trading since I was 13 with my own money and other people's money. And I tried everything to understand short-term ranges to scalp them. And this works great because it doesn't give you an opinion. It's instant. It's not like an indicator, MACD or a moving average that's constantly backwards looking. Regression is instantaneous now. This is a 5-second view. So even this 50 period, it's 50 times 5. It's 250 seconds, couple minutes. So that's very, very real time. So that's the purpose of it. I hope that answers your question. If you have a follow-up question. No, Stan, you're thinking like indicators. They're not indicators. You don't look at where one crosses another. That's not how it works. That's the get rich quick thinking where indicators will show you trades. Indicators don't show you trades. Indicators show you the past. This is not an indicator. This is gaming the traded volume that we're seeing over here on the dome. What is the range of the current traded volume? That's all it's doing. And I'm looking at it on 2 time frames just to see the geometry. When we get to an edge of the larger time frame, do we trade back into it? Yes. So we're respecting that range. And this is another good reason not to be short right now. That's why I took profits, because the potential to get back up here and retest this and maybe puke it is there. We're building volume up here at the high. So that's the story. How do we sign up for regular session today? No classes listed on the calendar. Oh, JVC,
I am going to post the link right now.
Please. So Stan,
right up.
The way that TRG worked up until tomorrow was, we have monthly membership and we have courses and live trading and we explain a lot of these different things. We're starting a new system tomorrow, which will allow people to just drop in for clinics and classes. And I'm going to be doing some price action stuff where I talk a lot about those regressions. And it's a really powerful tool. I don't know anyone else that uses it either, other than TRG people. I developed this about 20 years ago, and I started using it really aggressively about 17 years ago. And then as the platforms got better and the order flow data got better, it's just become more and more accurate. But again, they're not indicators, Stan. That's the key to understanding using order flow, is that there's no buy point, sell point where the indicator turns green or red. You're looking at the auction and you're determining where to trade based on the auction. And right now the auction is auctioning up. So this is no longer a short. And this is showing me the energy of that move. So I can see these moves up are making higher highs and they're doing it on greater volume than the pullbacks. And so we're working our way up. And this linear regression, when these two are parallel, that's trending. We are trending right now up in the very short term, obviously. So hopefully that answers some of your questions. Okay,
and
link
if you've
is live.
Got more, come join us at TRG.
Yeah, exactly. And again, you can join as a member, but if you wait till tomorrow, there'll be some announcements on how, if you just want to take my price action class on linear regression, you could just take that and it will be, lower than the cost of a membership for just that one quick class. So we're switching to something like that. There'll be more announcement on that tomorrow.
Stop by Monday. You should get a better picture.
Exactly. Yes. We'll have to work the bugs out for a day or two, I'm sure.
Yeah.
So look at that high volume node right there. We reverse there, but again, we're not pulling back. When you see that, if you're going to short that, you want to see the bottom just fall out, and it's not happening, guys. So be very careful being really biased short here. The short is working, but the real trade is going to be if we can push up to say 40-20 again. That's the opportunity. So, getting really short here at 90 is silly, even though, 15 minutes ago, that was a perfect trade and we made some nice money on it. So hopefully that's making some sense to those of you that are here, that are guests, public guests. Although I see most of the names I recognize as TRG members this morning. All right. So anyway, that's kind of the we're going to wrap this up real quick because the TRG session starts at 6, and I'm just going to kind of continue, but we'll go into the open, and I think today's going to be a great open. By the way, today will also likely be a really good close I will be trading it live. I don't know if I'm going to share my live with TRG. I might watch for an announcement. I just don't know if I'm going to have the energy to do this again at the close live, but I definitely am going to be trading the close today. Let's make those a little clear. Excuse me. All right. Anyway, so what we always do in TRG land, as we're wrapping up a session, burning desires, final questions. It is open. So this is office hours, open Q&A. So I'm leaving myself just a couple of minutes here. I will answer any questions about anything we talked about today. And we will wrap up a couple minutes before the top of the hour so I can get the other session open. So if you have any final questions or comments, let me have them. Yeah, that was a fun little trade. Let's see, what was the net of that? We made $147 was the net of everything after commissions. That's cool. I'll take that. Add that to what we made last night, and it's going to be a good day. What can I say? Yeah, this high volume reversal, I totally agree, Amy. I mean, it was really clear it was a high volume reversal, but it's not getting any traction down. I mean, this was the short I was in, but it's over. And this is again a classic mistake that people make. They get a bias, they say, "Oh, wow, it's a short." No, there's a short higher up here, but this right here is a really stupid spot to fade. It might work. But again, that's a good example of what I was talking about at the beginning. If this works and you're short here, it's because you got lucky, because we're going up and the volume is on the upside, and we're not seeing that massive absorption we saw up here. So I say the odds are really good. We're going to see 40-10, 40-20 around the open, and that could be a really cool place to fade. Again, keeping in mind that we could get all the way to this poor high that's above us at 40-70 and change. So, I wouldn't just marry 40-20, but this is 40-20 right here, and you can see why I like it. It's the top of the previous chunk of volume that I was talking about, and it's the bottom of the last consolidation. So it's going to take a lot of power to get through that and get to that poor weak high, but it could. Again, anything can happen anytime. These people that, again, post, well, this is good, and that just isn't likely, that's not going to happen. And you got to just think in odds, think in bets. That's how the game works. Great book by Annie Duke, Thinking in Bets. All right, last chance, burning desires, final questions. Any comments? Thank you for coming. Thank you, guests that joined us. TRG folks, we'll see you in just a minute.